All right, good evening, everyone. This is Joe Henches with Beyond the Chart, and this is a market update for Wednesday, December 4th, 2013. Well, we've had a couple days of downdraft, and what I want to take a look at first is the Dow Jones Industrial Average. The Dow was down 94 points today, but at one point it was down, I think, over 140 points, as you can see right here. So this is the first close below the 10-day moving average, 10-day exponential. Yesterday was right at it. It was slightly above it by fraction on the Dow. So are we getting a little bit of a correction, a little pullback, or are we getting something bigger? We won't really know until it starts to play out, and we'll see, do we pull back to the 50? Do we even pull back that far? I have a feeling we're going to, and I'm going to talk about one thing. You see these red arrows right here? Okay. These are where the short-term trading index, the trend, it's called different things, but I call it the short-term trading index. And I've talked about this before. Let me show it. I've showed this video before. So when this 10-day exponential moving average of the trend gets below 0.9, it's getting very bullish, extremely bullish. And this is an extreme measure. It's kind of a saying, okay, you might be at a top. Well, what we found is that this really is a little bit of a leading indicator. Okay, it seems to have been happening several days to say a week, week and a half before the actual peak. Sometimes it's right on the peak. So when you look at it on November 15th, we had 0.83. Well, 0.83 on this 10-day exponential moving average is the lowest reading we've had in the last 6 months or so. Okay. Back through May is the only ones I've got notified here. Really, it may be the lowest reading all year. I think it is. Okay, so it's the lowest reading all year. And what you're going to see is that when you come back to the Dow, these red down arrows are places where we got readings below 0.9. Okay, so you can see a little bit ahead of the peak and then right at the peak. Okay, a little bit ahead of the peak. If this turns out to be a peak, and it's probably going to because of the kind of reading that we're getting here, a little bit ahead of the peak in July, right at the peak on August 2nd, 1st, and then right after the peak as it's starting to turn down, and you got the 10 breaking below the 20. Okay, we don't have that yet. And here in May, we had it right in here on May 15th. Then we got it on, I think it was like May 30th. Yes, it was. So we had those two readings below 0.9 on the 10-day, and then this thing rolled over and continued to correct. Now, it wasn't a one-way street. You got this little zigzag up move here, but the corrective move did not complete until June 24th. So that's what's kind of telling me that we may have something a little bit more than just a little pullback or a slight close below right here and here. And so that's what we need to be watching out for. I want to take a look at the high-low indicator also. I'd been talking about this, and I showed this to you, I think, on Saturday. And this did not go to a new high. Okay, now we've broken down below the zero line. There are more new lows than there were new highs by 38 today. Okay, so that hasn't happened in quite a while. And this was the low point on October 9th. So now we just need to be on a watch. I mean, this clearly was signaling something was coming, and now we seem to be getting it. Okay, let's take a look at the S&P 500. All right. This is basically, been pushing up, doing the same thing. Now, it didn't pull back nearly as much as the Dow did here today. I don't even know if it closed below. Let me look at my 1797 is the 10-day, and it closed 1795, so slightly below the 10-day exponential moving average today. And we're getting these divergences like we've talked about. So I feel like from an Elliott wave count, when you look at the Dow and you look at the S&P 500, we could very easily be that this fifth wave is completed. Okay, and that we've got 1, 2, 3, 4, 5 waves up of this fifth wave, and that is the fifth wave of here's 4, here's 3, here's 2, here's 1 of the what we call an ABC move, and that this could be getting ready to roll over And we'll just have to see. The market's going to have to tell us. Let's take a look at the NASDAQ. The NASDAQ did not pull back nearly to the degree that the Dow and the S&P did today, but boy, this thing is really getting extended. I mean, you can see not getting the divergences to the degree. I mean, we'll be interested to see here whether or not it pushes. You can see the little divergence here on DI plus. Anyway, I think that's about it on the market. So that's kind of a quick snapshot. What I want to take a look at is the 3 stocks that, of the stocks I watch, I got about 36 stocks plus some other, I look at some financial stocks and I look at some of the high average 2 range stocks like Amazon and Apple. I do watch those, not to specifically trade them, but just to monitor them. Well, of the 36 that I watch on a regular basis, 3 of them, the top 3 today, Tesla was the biggest gainer. So let's take a look at Tesla. Tesla gained 16.5% today, up 20.5. Now, so what have we got on Tesla? I mean, look at the downtrend, the trend lines. The 10-day exponential is still below the 20. The 20 is hard down at a 45-degree angle, and here's the 50. Just the opposite of what you had back here in the April-May timeframe, okay? Just the opposite. So I'm not sure I would trust this, you know, to jump on board. And had a little bit of divergence that kind of led to that pop. I mean, the selling looked like it was slowing down in terms of getting a divergence here on DI minus, but still, I don't know. I mean, you'd have to get the 10-day crossing above the 20, and it'd have to start looking pretty strong. You know, big volume day today. Don't really have an Elliott wave count on this thing. I need to look at it a lot closer than that. Let's take a look at the next one on my list is SoFun, Chinese stock. And I'm going to take a look at some Chinese stocks tomorrow. I'm going to start doing that every Wednesday, try to focus on China and Chinese stocks. I thought that'd be kind of a fun thing to do. Let's take a look at SoFun. Now, SoFun has had one heck of a move, too. It last 2 days. Now, the main thing that's happened with SoFun is that they've announced a move into the financial services sector. So it's like they're trying to get into a whole new market, and everybody got ecstatic about this. And from the actual stock standpoint, it looks like we're, you know, possibly getting some divergence in here. A little clearer here on the RSI. Now, whether or not this continues to push remains to be seen. But when you kind of shrink back and take a look a little bit back here, you can kind of see that this looks like it's had 1, 2, 3, 4, and a 5th wave move here that had 5 waves in it. Okay, so we're at the extended end of SoFun, I think. So we'll just have to be careful if you're getting in, or I wouldn't personally be buying calls or anything on this stock right now. And let's take a look at SolarCity really quick, because I think we looked at that over the weekend. Not a whole lot last 2 days, right about there. We still don't have the 10 above the 20. It's trying, though, given the sell-off that we've had in the last 2 days. It's not too bad. And then Apple was a big mover today, too. Apple's getting right up into this range where I thought it was going to get, where I think we're in a 5th wave of this A, B, C, okay, corrective move. Again, I think this is a corrective rising wedge in a down move. And I had said I thought 573 might be a target. So we're in the 570, 575 range. We're getting pretty close, and that's right up near the top of this this trend line. So look to see if Apple starts to turn. That's about it for tonight. Thank you, everyone, for stopping by. And again, I'm going to take a look at having a post on China and Chinese stocks tomorrow evening, and we'll go from there. Have a great Wednesday. This has been Joe for Beyond the Chart.